Hey guys, Chris Peach here, and welcome to the Money Peach podcast. Hey, do you remember growing up learning how to handle money? Yeah, neither do I. So that's why we're here today, to make your money fun again. You know, we're going to talk about the principles in life that actually matter when it comes to managing your money in a way that works. So sit back, relax, and enjoy this episode of the Money Peach podcast. Before we jump into another amazing episode of the Money Peach podcast, I want to take a second to talk to you guys about my free live training event, Stop Living Paycheck to Paycheck and Just Live. Join me each week on this live webinar where I show you the 4-step system we use to go from living paycheck to paycheck to later paying off $52,000 in debt in only 7 months. And as a bonus for joining me on this live training, I'll be answering any questions you may have during the live Q&A session at the end. So head on over to moneypeach.com/webinar to get registered. Welcome back, everyone, to another amazing episode of the Money Peach podcast. I'm Chris Peach. This is episode 64. Now, my guest on the show today is my friend Jason Vandenbrand, and I'm excited to have him on because we can all relate to this. You see, Jason was in the mortgage industry, and he'll be the first one to tell you that being inside the mortgage industry, he has seen how broken it is. You and I and everybody we've known that has gone refinanced a loan or got a mortgage will tell you it is an extreme pain in the butt. It is not fun. It takes way too long. And sometimes you go through the entire process without even getting approved. Now, Jason said all of this needs to be fixed. So he created Lenda. Now, he's the founder and CEO of Lenda. They're a fintech company up in San Francisco. And what they're doing is they're streamlining the process. They're making it user-friendly. They are making it the Uber of the home mortgage and home refinancing process. So I don't want to spoil too much. So without further ado, let me bring on my friend, founder, CEO of Lenda. Alrighty, Jason Vandenbrand, thank you so much for coming on the show today. Excited to have you on. We're going to talk about mortgages, but more importantly, we're going to talk about your business, how you created something that's pretty special. I don't want to give away too much here, but thank you so much for coming on the show and kind of give us a little bit of background. Who is Jason Vandenbrand?
My pleasure. First off, Chris, thanks for having me. God, where to begin? First and foremost, I'm a husband to my wife, Erin. We're celebrating our 6th year of marriage now, 13th year together as a couple. We are planning on starting a family next year. Fingers crossed, but no announcements just yet. I'll be sure to let you know once we do have some good news to share.
Nice.
I'm a second-generation American.
What part of the country are you in?
I'm currently in San Francisco. I was born in a blue-collar suburb of Philadelphia. My father was born in Europe, in the Netherlands. And we grew up, kind of middle class, lower middle class in the early days. I was in a mixed-race family, so I had this kind of unique background, which has really in a lot of ways kind of shaped a lot of things that I believe today and a lot of things that, we naturally apply over to this business that I've started, Lenda. Times were tough when I was a kid. I mean, we were on welfare for a minute. We went through some really hard times. Money was super, super tight. But, ultimately I was raised in a family that was, super rich with love.
What did your parents do for work?
My dad was a construction worker, my actual, biological father. My stepfather worked for McDonald's. I started literally like flipping burgers, and it's kind of one of my first entrepreneurial endeavors, as a matter of fact. He would bring home all the leftover burgers after a shift, and I would take them to school and sell them in the cafeteria at $2 a pop. And I'd come home with like $30 a day. I'm probably 10 years old at this point. That led into, back east, obviously snow shoveling businesses and mowing lawns and anything to start something, do something, stay busy, start little businesses here and there. It's just kind of always been who I am.
So at 10 years old, you started your own business where you're taking burgers from what your dad brought home, which sounds like the overhead there is zero.
Yeah, it was 100% profit.
100% profit, and you're taking it to the cafeteria and you're reselling them. I like that. I think that's super cool. So was this your first entry into, wow, I can create income for myself by myself? Is that kind of where you started? It was, I guess, 10 years old reselling burgers?
Yeah, I'd say so. I mean, it's always interesting to think back at the entrepreneurial journey, and Lenda is now my third company that I've started, like official company. But if you rewind all the way back in life, I don't know whether it was the burgers or mowing lawns or shoveling snow or the paper route or what have you, but it was certainly early on in my life when I just always kind of figured out a way to have the side hustle, a hustle of some sort to make some extra bucks. we didn't have money growing up. So, if I needed to get a new pair of sneakers or something like that, it was on me. And that was it. Yeah.
It's funny you mentioned doing that at a younger age. I have kind of a similar story. I think when I was younger, I had obviously everybody had the mowing the lawn route, but when I got to college, it got real creative. And I don't know if you remember, but probably like right around the 2000, 2001 was when TurboTax got real popular. Uh-huh. And so my freshman year, I went online and I did TurboTax. I think I only made like maybe $10,000 that year. I was changing tires. And so I realized, wow, this was really simple for me to do online. I just printed off some forms, or I did it all online. I can't remember exactly how it works. So the next year, I went around to all the dorm rooms and I put on the flyer board that I was doing taxes for people, and I would charge $50. And I would basically just take their 1040s and I would go to my desk in my dorm room and I would go on to TurboTax, and I think it was $5. And so I just punched in all information, hit send, and I was like a $45 profit. And I remember doing that going, this is a lot easier than changing tires in Phoenix, Arizona when it's 100 something degrees outside. And that was kind of when the light bulb went off. And then I actually from there created a pool route where I went around and cleaned people's pools and actually had other students cleaning pools for me. And I look back going, I don't know if I did it exactly right, but it was kind of my foot in the door to running my own business. And since then, I guess I've always had these ideas in my head that keep coming. Sometimes I think I don't know if it's for you, but you get so many ideas, you're like, I don't even know where to start.
Yeah, and you got to prioritize. Otherwise, you'll get nothing done, as you know.
Yeah.
Yeah, I go back to the snow shoveling experience specifically. A group of kids would go around the neighborhood, and back then there was actually a lot of snow in Philadelphia. I was always the guy that they would send up to the door to actually knock on the door and talk to the homeowner. And, I started developing my pitch because, we would knock on 10 doors on a given street, and maybe we were lucky enough to get one to say yes. It was pretty simple, it turned out. All they wanted, number one, they were enamored that someone actually knocked on the door, and it was this young kid in a puffy jacket or whatever. They'd say, hey, what's going on? I'd say, hey, we're just here. You want your driveway shoveled? How much is it? Well, it's $25 and $10 if you want the sidewalks. Just plain as day, right to the price. And what I learned is that, okay, well, that conversation would take about, all in about 60 seconds. And then all I wanted to get to was a no as fast as possible so I could run to the next house and ask the next question in 60 seconds and try to get to a yes. And so, we'd run down the street literally, and all the rest of the crew, if you will, would be carrying this shovel that we built that was as wide as the driveways, and we'd all get behind it once we got to a yes and just push it in one fell swoop. And so instead of everyone having a shovel and shoveling snow, we would do it with one fell swoop. It would take about 30 seconds. We'd already collected the money, and then we'd quickly run down to the next house, get to another sale, and the other guy, like two guys, would stay behind and finish off the sidewalks if they had paid an extra $10. And so it was like, I don't know, I always obsessed with like, how do you take some sort of a transaction, if you will, and make it more efficient so you can do more. And that's kind of carried over into Lenda for sure, and other entrepreneurial endeavors I've had in life.
So I know you had a lot of different, I'm on your site right now kind of reading about you. It says, serial entrepreneurs. You've had a lot of different ventures, which most of the people I've interviewed on this show, they have. They're not just one dimensional. They've had, multiple businesses, which means they've had multiple failures. And then finally the 7th one or the 10th one stuck. So kind of take me to, how did you get involved inside the mortgage business?
Yeah, it actually goes back to, probably my adolescence. So my first, I don't want to say real job, but I worked construction. So my Uncle Pete was a contractor, still is in Philadelphia. And he hired me, he paid me $5 an hour under the table. Maybe the IRS will listen to this and I'll get a tax bill at some point, but paid me $5 an hour under the table, and we did roofing, we did shingles. So I was I think 13 or 14 years old, carrying these, got strong that summer and got a little tan too, and worked really hard. And over the years, including through college, I was the first one in my family to go to college, and I studied finance because I had zero formal education in money, which I know you're super passionate about. I'm super passionate about. Ultimately, I'd built every single aspect of a home, I realized. So I graduated college. I had this finance degree. I studied finance. And I ultimately, long story short, I fell face first into mortgage banking. It was 2004. It was super hot. all of the banks were hiring, all of the mortgage banks were hiring. And so I got involved because, number one, I could now talk intelligently about money and financial planning, and giving that mortgage makes up, anywhere from 20 to 50% of your daily paycheck. I was good, and I was able to talk about that within the context of other expenses that people incur in their lives. And then, because I had built homes from ground up, from foundation to plumbing to electricity, all the way up to the roof, I could talk to people about that. And so, customers would get on the phone with me or come in and visit me, and they'd say, "Hey, Jason, I want to get some new windows in the house." And I'd say, "Great. Well, how old are your windows right now? And what kind of windows do you want? Have you gotten some competing bids from 4 different contractors? And what kind of windows are you thinking about? And are you thinking about Anderson or Fleetwood? I mean, there's so many things to think about." And they were just blown away by the fact that someone that was meant to just be the financial guy could actually talk about the construction piece of it. And so I was really good at it. And then, as I continued in my career in mortgage, I kept hearing the same things from customers over time. And they were frustrated with the fact that it was really hard to get a really good sense of what they were going to pay for the home loan, right? They would get a rate quote from a bank or one of our competitors, and they would quote them a 4%, or back then it was 8%, but they'd get quoted an 8%, and then at the 11th hour, it would turn into an 8.25%. And a customer sitting there scratching their head. This is a very unique problem in the mortgage industry. It still exists today. And so I kept hearing that from customers. And then they were frustrated by the paperwork. They were frustrated by bankers' hours, 8 to 4. So some people were having to take off work to actually get their transaction done. And so I kept listening to customers over and over and over again, and finally just decided to do something about it, right? So, you start a company and they say, "Okay, well, you want to learn how to fly, jump off the building and build a plane on the way down." And so in a lot of ways, I took that leap of faith to apply what is a technology layer to this heavily antiquated, heavily regulated, opaque, confusing mortgage industry. And look, at the end of the day, this is people's most important financial transaction. And so, the impact that we're having on people's lives and their bottom lines at Lenda by ultimately building this experience that's honest and fast and completely online, that's what gets us up every day. That's what makes us happy. And there's pride in that, in helping people through that transaction.
Jason, there's so many confusing things in the financial world. I guess half jokingly, I say that the people in the financial world, they want it to be confusing. The less you know about it, the better it is for them. So I guess that's my conspiracy theory or whatnot. But I do remember this. So when I was, Andrea and I, when we were in our early 20s, I remember we got our first mortgage. And I look back, that was, so I'm 34 years old now. So let's say that was 10 years ago. And I remember, I look back at this point now and I'm like, we had no idea what we signed. Mm-hmm. So long story short, to come out of it, we had signed an 80-20 loan with, an 80% on one loan that was fixed, 20% on another one with a crazy arm. We didn't even know what an arm was. We were just told, the lady was so nice. I'm like, "Oh, just sign here and just sign here." And, and we go through this process. And I remember a couple of years later, our mortgage started going up. And we're like, what is going on here? Why is it going up? And, shame on me for not knowing. But also, I think it was crafted by the mortgage industry that, hey, we have 2 kids out of college who now have an income. Let's have them, let's get them excited about getting into a house. And then all of a sudden, once they're signed and they're in. We got them. Mm-hmm. And that's kind of what I felt like. And that was kind of that was the start of our money problems, because we went completely broke after all that. Mm-hmm. Ended up losing our home. Mm. And that was a rough time. It was like rock bottom for my wife and I. And you said it perfectly. The largest expense in your life, you said 30 to 50% of your take home. I advocate, don't let it get that high as your take home pay. But the largest expense we have in our life is our mortgage. And it's so funny because, I've literally seen people drive 4 miles out of the way to save 3 cents on a gallon of gas. Mm-hmm. But whether it's, 300 or 335 or 360,000, it's over the next 30 years, I'll sign it. And you're like, whoa, you just made a $60,000 decision just because it was on a mortgage, and it doesn't feel like that decision, but you're going to drive 4 miles to save 4 cents on gas. Blows my mind. And it makes me think that the mortgage industry, I'm not saying you, but the mortgage industry or the banking industry, they have it figured out. Marketing geniuses that they don't allow us to feel the actual pain of, what it is when you make a few mistakes in the mortgage process. So when I came across Lenda, when you and I first talked and you kind of told me your philosophy and the reason why you started, I got excited because I was like, whoa, it's a guy from the financial world that actually gets it. He understands the problem, and he's kind of an advocate, not for the financial world, but for, I guess we call it the little guy.
Yeah, absolutely. And, we talked about this, and I do believe that it's made to be complex on purpose. I truly believe that system has been built by banks over the years, and you're talking 50, 60, 70 years now of what we still consider the modern mortgage market. Hasn't changed that much. But I've been in that same exact position. I bought my first home when I was 24 years old as well. And I remember sitting down with that stack of paperwork and holy cow, it is confusing, it's scary, it's expensive. Where else in your life are you going to sit down and suddenly see numbers in the thousands or the tens of thousands or the hundreds of thousands? And so, naturally, 3 cents, it's like, okay, 3 cents. But now we're talking thousands of dollars. And so I've always been an advocate. When you look at your personal finance, you should always focus on the biggest thing first because it's going to have the biggest impact. There's a lot of personal financial advice out there, which you and I have always agreed on is personal in nature. That's why it's called personal finance. And a lot of pundits out there and talking heads will say, oh, you want to save money, cut out the lattes. You want to save money, the latest one is cut out the avocado toast. Well, I say enjoy your latte and have it with avocado toast within reason. Focus on the biggest expenses first, your mortgage. Focus on the mortgage. If you can find 0.1% less on your mortgage, 0.25% less on your mortgage, you will save $15,000 just right out of the gates. And that has so much more impact and will allow you to afford things like the lattes and the avocado toasts. And let's go even bigger than that. What about college for your kids? What about retirement savings? So freeing up that cash on your biggest expense is so important. And that's the critical thing that we're working on at Lenda. And how we do that is by investing in technology on the back end so that the dirty secret of mortgage, Chris, is that it costs $8,000 to produce a loan. If you're Wells Fargo or any of these big banks out there, it costs $8,000 to produce a mortgage loan. Okay, let's get down to brass tacks. $8,000. Where is that going? Well, it's going to loan officers and their commission. It's going to fees. It's going to those big branches at the center of every city and on every corner. They cost money. And so it's $8,000 however you slice it. And guess what else? Customers are paying for that $8,000. And so we said, well, how do we get that $8,000 to zero? And it's going to take 10 years to get there. But the only way to answer that question is via technology. So no more commissions, no more fees. We're not having branches because branches cost money and we don't want customers to pay for it. And so over time, what you'll see is customers are going to naturally continue to transact online. We're in the midst of this massive generational shift where everyone does everything online all the time. So you're not going to be going to bank branches in the year 2025. Come on, these things are going away. They're not necessary anymore. You're going to go online. You're going to go on your phone. You're going to transact through this process. Paperwork? No way are we going to have paperwork. Number one, we're killing trees by doing this. Number two, it's not secure. Paper gets lost. Things get missed. You don't sign it. It's confusing. You put all of this onto an online platform. Suddenly that $8,000 goes to zero. And suddenly your interest rate goes, instead of it being a 4%, which it is today, goes down to a 3.5%. And that 3.5%, that 0.5% delta, that change in that interest rate suddenly means your bottom line, you're saving for your kids' college. You're saving for your grandkids. You're saving for whatever you need the extra cash for. And I think that that's so, so critical as we approach this problem for people.
So I want to go take a step back there because some of the things I've been learning just from the last, from starting our blog and doing a lot of research, and now we have our program where one of our modules is actually dedicated to mortgages. So we're always trying to find, anything we can about mortgages. And I love having an expert like you on the show because some questions I have is things that I've learned over the years is the 30-year mortgage wasn't always the 30-year mortgage. I mean, I think I read just recently, like if you go back to like the early 1900s, only like 5 to 10% of homes had a mortgage. And the rest were either owned or rented. And you fast forward to like the 60s and 70s, where all of a sudden it became wildly popular to get a 30-year mortgage. And it's not like a government regulation that you have to get a 30-year mortgage. I think a lot of times, at least I know I did, I thought that was like some kind of law the government created that, oh, mortgages will be 30 years or 15. I had no idea that that's kind of just up in the air. Kind of explain to like how that happened, that transition.
I don't know the exact time of the transition, but your facts are correct in so much that, 100 years ago, mortgages were not what they are today. I think the important thing for people to know is, 70-something% of people have a 30-year fixed mortgage in the United States. There's 100 million mortgages out there. So there's 70 million 30-year fixed out there. And a 30-year fixed is, number one keyword, it lasts for 30 years. Number two, it's fixed. That rate, whatever you lock into at that market at that very given time in history, that's what you should expect to pay for that 30 years. And, I don't think there's anything wrong with a 30-year fixed mortgage. I actually think that, it's, especially with rates where they're at right now, it's actually, hey, lock and load. The problem is the way the amortization schedule works. So you can make a monthly payment, and let's say it's $1,000 for argument's sake. It will take approximately 20 years before you're paying $500 of that dollars is going towards the principal balance and $500 is going to the interest. But for those 20 years, the vast majority is going towards interest. And so that accumulates over time. And so what oftentimes, and I suggest this, I've done this myself, I suggest this to everyone, is you can really start to accelerate and pay off your mortgage debt in a couple ways. First and foremost, I always recommend setting up biweekly payments for people. Most people get paid every 2 weeks. And so a biweekly payment on a mortgage is meant to accomplish just that. So every 2 weeks, if your payment was $1,000 a month, you would pay $500 every 2 weeks. And in theory, what you're doing is you're paying an extra mortgage payment per year, and it goes to the principal. So you're actually paying yourself. Awesome, right? That's like always a good thing to do. The second thing, if you can afford it, is tack on an extra, even $10, $20, $50, whatever you can find. And what will happen is that 30-year loan, by biweekly payments and putting a little bit extra on top, you can actually pay it off in 15 years or 10 years or even faster. And then imagine not having that $1,000 payment anymore. What can you do with that? Now you're putting away $12,000 a year. Now your children are going to any university they want. Now you're taking those vacations that you've always dreamed of, and you've freed up time, this financial freedom that as Americans, in a lot of ways, we're all striving for. So, the other thing to do, and you can always, instead of a 30-year mortgage, you can do a 25, you can do a 20, you can do a 15, you can do a 10. Those are all options, but don't forget, when you do that, you're locked into that payment for those 15 years. And so, it's helpful to be strategic about it. The safest and the most common thing is the 30-year fixed, and then anything shorter term than that, or even these adjustable rate mortgages, which I'm not a big fan of, honestly. I know there's an argument to be made that they're for some people. I don't think they're for most people. I think the uncomfortableness of a rate adjusting just doesn't sit right when you're thinking about your home and your family and your kids and security. So I think that's where Americans have been relatively risk averse and have favored the 30-year fix. So hopefully that provides some context on how I think about it, at least, and what we think about it at Lenda as we build the company. Yeah,
you and I we're definitely on the same page there, especially what you said there with the adjustable rate mortgages. I guess there's a time and place, but if I was just going to give, if I was going to give advice to my kids, which I do, but if I was going to give advice to them buying a house, I would tell them to go with a fixed rate mortgage, because a fixed rate mortgage is just that. It's fixed. It's not going anywhere. The interest rate's going to be what the interest rate is year 1, year 10, year 29, year 30. But here's what is surprising that I think a lot of people don't realize here. So I have a little mortgage calculator that I'm punching in right here. So I just took a $250,000 home. I put it on a 30-year mortgage, and I said 4.5%. Looking at this, it says that your $250,000 home will actually cost you $456,000. Okay, so almost double on a 4.5% because it's 30 years. Now, you had said, if you can add anything extra. So I said, okay, what if we add $100 extra a month? Okay. What happens is you pay off the loan 4 years early, which is awesome, but you save about $34,000 in interest by $100 a month.
Yep.
That's cool. I mean, that is crazy. Yeah. So, I've heard people say, oh, the latte factor, you're spending, $3 a day times, 31 days, you're spending almost $100 right there. Just get rid of your lattes. What you're saying is keep your lattes and let's find a way to cut $8,000 out of the mortgage part, which no one's telling you to do that. So kind of tell me, you walked through it a little bit, but how does Lenda do that?
Well, I want to go back to your point real quick because I'm sitting here with my mortgage calculator as well. And, I punched in the same information and then, I added the extra $100 and then I just quickly switched it over to biweekly as well. That takes another 3 years right off the top.
Wow.
Yeah. And again, you don't feel the pinch on your monthly budget as a homeowner. You just make your payments every 2 weeks. You throw on top whatever you can. And suddenly, 8 years of payments that you're not making. So 8 times, what was it, $1,200 times 12, that's another $115,000 of payments that you're not making. Your house, that's a lot of money. And so, those kind of tactics, very tactical takeaways that I hope people, really, really hear when we talk about this kind of stuff. I think those things they should almost be mandatory. And those are things that we continue to work on at Lenda. So back to your question, on the, focus on the $8,000. So the $8,000, what that ultimately means for people up front is it allows us at Lenda to compete with these large banks. And so, my PSA for people is, I don't care who you work with. I mean, I do. I want you to go to Lenda. I want you to work with us because I think we've built something really incredible that saves you a ton of money and makes it easy and fast and completely online. But even if you don't come and work with Lenda, just really, I caution people to stay away from the banks, the big banks, when it comes to their mortgage, because you're overpaying. You are overpaying unless you are a high net worth individual. So if you're in the top 1%, sure, go to the banks and they're going to give you a sweetheart deal because, they're also going to take, your millions of dollars and put it into investment vehicles and make their money there. But if you're like most Americans and you're not in the top 1%, stay away from the banks. And the reason behind that is you can go to online lenders like Lenda. The technology and the automation that we've built behind the scenes removes the cost to produce these loans, and that helps us lower the price on the front end. So you compare us to, say, a Wells Fargo, we're 1/8 to 1/4% lower in rate, right out of the gates, the same exact product. And not only that, you're also not going to spend 2 to 3 months going through the process. You're going to spend 2 weeks. You're going to transact completely online. It's 24/7, 365. That convenience, that's really hard to measure, but it's kind of important. That's more time to go spend with your family and the things that really matter in life. That's how we think about it right up front for consumers. And then long term, Lenda is ultimately meant to be this place where you think about managing your mortgage, right? So you log in, you have your account, setting up in the future biweekly payments automatically. Setting up, hey, I'm on ACH. This is already coming out of my checking account, my family checking account, or however you manage your finances. I want to pay an extra $50 this month. I want to pay an extra $100 this month. I cut out one latte a week or one avocado toast or however you found that extra money. What does that actually mean for your financial future, right? So you and I can sit here, Chris, with our financial calculators and figure that out. But why isn't that built right into your most important financial asset? And why are you not managing that online? And so, as we continue to invest in this technology and move forward, these things become super hypercritical for people.
Hey guys, Chris Peach here. Hey, did you know Andrew and I were once living paycheck to paycheck and we had racked up $52,000 in consumer debt in only 4 years of marriage? Yeah, we were normal until we hit rock bottom. You see, since that moment, we decided to stop borrowing money, stop using credit cards, pay with cash, and then we did the unthinkable and we paid off $52,000 in only 7 months. Sounds crazy, right? Well, maybe not as crazy as working nonstop to send all of our money to the bank in the form of payments. Here's the deal. I'm hosting a free workshop where I share our story and I show you the same step-by-step method to going from broke to debt-free and then on to building wealth. So head on over to moneypeach.com/workshop to grab your spot in this free online training that I promise you are going to absolutely love. Once again, that's moneypeach.com/workshop. So our listeners, they're going to go to Lenda's website. Kind of tell me the process that they're going to go through and why is this a better process than, going and sitting down with your banker at Wells Fargo or any of the big banks, or even something like Rocket Loans, real popular. I think it's by Quicken Loans. What is the benefit of, when you sit down at your desk and you're going through Lenda's process? Kind of walk me through that.
Yeah, ultimately, Lenda was built to make the home loan experience honest, fast, and completely online. And so let's kind of break that down. So honesty in mortgage, in home loans, what does that really mean? Well, we've built integrations so that when you get a price, it's accurate. If we quote you a 4%, you're getting a 4%. And as a consumer, you get to use the tools at Lenda to figure out what works best for your financial scenario. We have built automation technology on the back end that helps lower fees. So you're not going to pay fees to Lenda like you would to a bank. That's an extra $2,000 that you're typically paying to a bank and a Quicken Loans. And I'll come back to that. I think that's the honesty piece. Remember, there's, and this, having gone through the transaction, and a lot of your listeners have gone through this transaction, but there's other fees that are required to make a home loan possible. You got escrow fees, you got title fees, you've got appraisal fees. Well, we've also built integrations with their databases and their pricing engines so that when we're giving a quote, it's accurate. The last thing we want is for a consumer to have the experience that has been happening for 50, 70 years is, hey, you go to the bank, they tell you, yeah, we'll get you a 4%, and then you're about to close on the home, and they say, whoopsie daisy, it's a 4.25%. Well, that doesn't feel good as a consumer. That's like pretty much the worst possible experience you could have, and it's no wonder that banks' ratings are so low in the customer experience realm. So honest, fast, completely online. On the fast piece, when you go and you sit down with a bank, they're notorious for taking all of your information, and then 2 weeks go by and you find out that you're either approved or denied. And so many people have experienced this. Well, back to Lenda, we've built technology so that you're finding out if you're approved within minutes online. We have all of these algorithms that are looking at your financial profile, comparing it to the market and what's available. And so if you qualify, you keep going through the process. If you don't, we tell you, you don't qualify, here's why. That's transparent. And that's what helps this entire process be a lot faster than usual, not to mention the automation piece on the back end so that you're not paying for someone to sit there and open title. It happens automatically. You're not paying for someone to sit there and figure out which appraiser to use. It happens automatically. And what happens is instead of it taking the industry average to close a loan is 2 months, it takes 2 weeks at Lenda. So enjoy your extra 6 weeks of time where you're not dealing with this kind of stuff. So honesty, fast, and then online. Look, the mortgage business, you got pretty much 3 paths now. You can either walk into a retail bank operation, you can go online and your information is going to be sold off and you're going to get telemarketed until you want to throw your phone out the window, or you can work with an online direct lender like Lenda. And so, I think personally, I hate telemarketing, Chris. I'm sure you do too, and I know everyone else has gotten that phone call at dinner time at the most inopportune time. As an industry, we have to evolve past that, and Lenda's wants to be part of that solution. So we don't telemarket. We also think it's such a major inconvenience to visit a bank. Walking by a bank at 4:30 and it's closed, that's the most frustrating thing in the world, especially when you're trying to buy your home or refinance your home. So hey, we make this online. You can access 24/7, 365. And that's the convenience that customers love. So, the other argument is, I have a question and, I'm not finding the answers online. Great, no problem. Give us a call. We have people that are sitting here that are experts in mortgage, as I am, who are so happy to answer your questions and walk you through the things that the website doesn't answer or that the app doesn't answer. We've taken the best of what banks and other mortgage companies have offered, and we continue with those things like service, but we also layer in the technology piece that they're just not doing well, and customers have been complaining for years and decades now. Honesty, fast, completely online. You brought up Quicken Loans, Rocket Loans. Ultimately, I think how Lenda competes with them is we give you a price right up front. We tell you exactly what you're going to pay. We're not going to ask you for all sorts of private information, your social security number. We're just not going to put you through that process and then give you a price and or turn you down and not qualify you. So you come to Lenda, the first part of your experience is going to be to get what you qualify for, all of your rates, all of the fees, everything that's available to you and your unique financial profile. You go to a Rocket Loans, they're going to say, okay, I'm going to have you fill out 50 forms. I'm going to have you put in your social. We're going to pull your credit. I'm going to have you sign all this documentation. And then I'm going to tell you that you get a 4.25%. And you're like, wait a second, I just spent 45 minutes doing this. I just opened up another tab on my browser and I went to lenda.com and they're telling me right now I get a 4%. Wait a second, that doesn't feel right, okay? So, we want to be really thoughtful about the customer experience. We don't want to make people spend time where they don't need to, and really allow them to self-educate and self-drive through this process without paying someone's commissions.
So what are you guys basing the overall picture off of? Is it the credit score or credit report? What are the things that you guys are looking at Lenda to approve someone?
Yeah, we're still looking at kind of your basics, right? So we're going to look at your credit, all right? And we're going to look at the home, the collateral, all right? And so if you have a $300,000 home and you want to borrow $200,000, great. Like, that's no problem. If you want to borrow $300,000 of the $300,000, like, that's not Lenda. That's not our customer. And, that's kind of the stuff that got us in trouble as a country in 2007 and 8. And the third thing we're going to look at is the ability to pay. So, we're going to look at your income. We've built some integrations to be able to pull that data directly to lessen your load as far as documentation that's needed. We're going to look at any kind of assets that you have. We've built direct integrations with, I think we're up to like 4,000 banks in the country that we can go and get that data now. So we're going to make sure that, again, you can actually afford the home that you're trying to get into or refinance. When you're finished with Lenda, we have done a good job if you feel like you know exactly what you got, that it was the right deal for your financial scenario and your financial plans and your family, and you felt like you were educated through the process. And, there's not that feeling that you and I talked about earlier in this conversation where it was like, that was scary and that was, I have no idea what I really got here. That's not what this is supposed to be, okay? Especially when you think about the impact that it has on people's lives. We have to take it that seriously. We have to treat this with the respect that it deserves, given how much of an impact it has on people's lives.
Yeah, that's one thing I guess that's my one biggest pet peeve with big banks is I can't tell you how many times, these horror stories I've heard where, one of our students in our class says, they show me their income and they might make $55,000, $60,000 a year, and they get approved for like a $375,000 mortgage. Their monthly payment is like 55% of their monthly take-home pay, and they're just so pinched. They can't, there's no wiggle room. They can't go on vacation. They can't pay off debt. They can't do anything. They can't invest in their 401ks. And it starts off as, you get dreaming about, you could have this house because, I was approved for it. And so did you guys kind of pull back on that a little bit when you guys look at your algorithms to say, technically, you really can't afford this house as much as you think you can, or the other banks have told you? Have you guys pulled back on that?
The way we've approached it is, again, tying back to the whole point of the company, honesty, is let's have that conversation with people versus just saying, well, you qualify up to 50, 55%, so here you go. Let's have the conversation, right? I don't think that everyone should be a homeowner. I don't think it's always a good idea to be a homeowner. I think that, the exact example you just gave, Chris, where someone's making $55,000, $60,000 a year, and yes, they can afford a $400,000 home based on parameters, that's not necessarily the best decision at that time. They very well may want to think about this. So, our job at Lenda is to give them that information as early as possible in the process so that they can become educated and look at this from a holistic standpoint. Mortgage being what it is and how important it is in your day-to-day finances and your monthly finances and your life, it has to be taken that seriously, because if you have all these other expenses, if you have a car loan that's costing you $500 a month, if you've got credit card debt that's costing you a couple other $100 a month, if you're trying to save for retirement and save for your children's education, all that stuff adds up. The last thing you want to do is put yourself in a position to get into a home where suddenly, as you mentioned, you're eating ramen noodles every night. That's not the idea here. Let's put people into a position to make educated decisions so that when they do buy their dream home or when they do refinance their current home, that they're armed with this information, this power to make the right choice. And so that's where we focus. We do that very well on the front end. And again, as a consumer, you're not paying someone commission and fees to give you that information. Everything I just said is free. Go to Lenda, put in some basic information. It will tell you exactly what it's going to cost you. There's additional calculators right there that you can enter in and say, and it will tell you, you know what? This is not a good idea. This refinance is not going to save you a penny, and therefore we're not going to do it. You might be able to get onto Wells Fargo and they'll do it for you, but we don't think it's a good idea. Let's be honest about that conversation. Let's, as an industry, and especially with technology on our side, let's get to the point that, we start allowing ourselves to be honest with our consumers. That's what they want. That's what they've been screaming for 50 years now. So hopefully that answers that question. I kind of went on a rant there, but you know me, I get fired up on this stuff.
No, that's good. I mean, you're obviously passionate about it. And that's what I like, is because, listening to you when we talked off air, I mean, you are an advocate for the person sitting in that chair that's getting sold a mortgage that they do not need, or they're paying the $8,000 commission, wondering what the heck happened. And it, instead of it going over and over again, I mean, you found it. You found a way to fix it. It's broken and you're fixing it. I think it's absolutely great. I absolutely love, I love everything that you're talking about, but just sitting here on your site, reading about it, I mean, you're just making it so simple. Like, before we hopped on, I went over to Wells Fargo and I was reading, some of their stuff on the mortgage, and it's so confusing. I don't even know what I'm reading, and I'm in the financial world, and I'm just like, this would be so confusing. My parents would look at this going, what is this? And you go to Lenda and it's like, how does a mortgage interest rate work? And it breaks it down. And so, I mean, it's a platform where now someone doesn't have to go and feel stupid anymore when they go out and buy a mortgage. It's all right here. And I think you're going to break down a lot of barriers for people getting into a home that they can afford, because, I think it's the whole paralysis by analysis. Like, I don't even know what they're talking about. And now, you have Lenda, which is, I like it. I think it's really cool, Jason. So, but one of the things that we do, and towards the end of the episode here, is going back to kind of your story. I mean, you grew this business from the ground up, correct?
Yeah, ground up. I started it myself in, it's been a long time. I'm getting old here. It's been about 5 years now.
Okay, so 5 years you started the Lenda. I mean, was it at your kitchen table? How did you start it?
Kitchen table, coffee shop, classic, and then moved to a small little office space that was, I think, 200 square feet. I started working with technology people to build out the software piece of the business that's now become the biggest part of it and the biggest expense for us. And then we truly believe in the technology community that we're so fortunate to have here in Silicon Valley and San Francisco. So we work in office space that allows us to be very close to our neighbors and be able to share ideas. In a lot of ways, okay, we're focused on mortgage technology and consumer-facing technology, and our neighbors are focused on B2B software as a service sales. But if you start talking to people, you start to understand that there's a lot of similarities, a lot of things that you can learn from each other. And I think that that's been, a really great driving force for us as we've continued to grow Lenda.
What books would you recommend to somebody that's wanting to, get into not the mortgage business, but wants to start their own business or take that leap of faith where they're sitting there at their kitchen table like you, or creating the next idea and taking it forward? What's your favorite books? What do you recommend?
It's almost cliched, and I hate to, use the kind of classic ones, but I think it depends on the stage of the company. If you're literally day one, you've got this great idea and you want to take that leap of faith and go for it, I can't recommend enough Lean Startup by Eric Ries. I think it really helps you prioritize I literally had this conversation with my brother-in-law last night. Start lean, stay lean. Can you find proof points that your business is viable straight out of the gates before you start investing real money into it? So, as an easier parallel there and an easier argument, if you can figure out how to get this thing off the ground for $10 or $20, do that rather than going and investing and building this major website that's going to cost you tens of thousands of dollars and going out and hiring a bunch of people and making all these really expensive capital investments depending on the business only to find out that there's no customer demand. So start super lean, make sure that customers want what you're building. And then once you have that customer and they fall in love with your product, they're going to tell their friends and their family and their colleagues. And suddenly one customer turns into 3, turns into 30. And then you actually have the capital to start investing into all the things that you wanted from the get-go, but at least you have customers now. And I think that's such a critical thing out of the gates. I remember our first customer, a gentleman named Ed, I can't use his last name, he was down in San Diego. And I've told his story a billion times, and I'll tell you now because I think it's hypercritical. So I built the first website for Lenda myself. I am not a technologist by any stretch of the imagination, and looking at this site in hindsight is embarrassing. But I'll tell you what, Ed came to the site, and Ed worked through my hypothesis and what I was ultimately trying to solve for in day one was to prove people wrong that a customer would trust the internet enough to give their most personal of information and transact online without any telephone intermediation. If I could prove that was correct, that hypothesis was correct with one person, then I was going to keep going. And so Ed came to the site. I'll never forget it. I got all of his information. I think 32 days later, the loan closed and it all happened. And it was like, oh my God, I can't believe that happened. I had spent literally about $500 to get all of that set up at that point. And that was my own money. And so I called Ed. After the loan had closed. I said, hey, Ed, this is Jason Vandenbrand. I'm the loan officer on your transaction. And he goes, who? And I said, oh man, I'm going to be telling your story for the rest of my life. I don't know if you realize that this is like this critical piece and of like for me to decide whether, this actually had legs, but it does. And so Ed, since I have you on the phone, walk me through your process, walk me through your experience of what you just went through and going through that. Tell me everything you wish that we would keep and everything you wish we would stop and everything, every feature you wish that we had. Tell me all of that. And I spent an hour on the phone with him, and he basically told me all of these things that I then had this kind of win behind me to go and invest in so that, the Eds of the world, if you just listen to your customers and build what they want, then you'll get more customers. And you just keep doing that over and over and over again. So here we are, fast forward 5 years, there's still not a single customer at Lenda that we don't talk to and ask about their experience. There's still not a single customer that we don't talk to and say, what else can we build for you? What was great about this? What completely was just like hair-raising, God, I wish that Lenda had that. That gives me the motivation to go out and build it and invest in it. And so I know that was long-winded, but start there with lean. And then as you continue to build the business, get proof points from customers and demand before you take the next step. I can't preach that enough. I think it's so critical.
No, you're exactly right. I do that with students as well. As after they go through the program, they will get some feedback from me, and I'm requesting some feedback from them. And some of the things they have said to me, I had never once thought of. I remember when we first started our program, the students had graduated, and I sent out the survey, and then there's a spot in there where they can write anything they want, just any kind of open feedback. And they said, it'd be really nice if there was a community, like a forum or something where we can talk to the people and the other students in the class, because maybe we're going through the same thing. And I thought, why haven't I thought of that? I never thought about that. So we created this little private Facebook group. And over the last, I would say, year, it's been wild to see people just back and forth communicating. It's funny, you have people that are, I would say, kind of friends, and they're on opposite ends of the country or even opposite ends of the world. And, they know each other, they're encouraging each other, commenting each other. A year later, they're doing this. And so that was just one thing that I learned from surveying the customers is, what would you like? And then there's been things that we've also taken out of the program and things that we've done differently on the site based on feedback as well. So it goes both ways. I think it's super beneficial.
Yeah.
Jason, the next question I always ask everybody is, what is the picture on the home screen of your phone?
Oh, man. It is a picture of my wife and I. So we're both avid cyclists in our free time. And it's a picture of her and I on a cycling trip that we took together this summer. I'm looking at it right now, smiling. Both have our helmets on, sunglasses. It was a rainy day, so we both have our rain jackets on. And just pedaling through. There's some picturesque mountains in the back and a little pretty lake on this ride. And we actually commented on it when I changed this picture. Just that moment, we're so happy that we actually stopped and bugged someone to say, hey, will you take our picture? Because now we have it, and now I get to look at it every day when I turn my phone on.
That's cool.
How about
Very
you?
cool.
What's on your
On mine, we had, it's funny you're asking me that because I asked this question to everybody, and you're the only person to ever ask what's on mine. So about a little over a month ago, my wife's birthday, we woke up really early, I think it was 4 a.m. It was pitch black outside, and she wanted to go hike here in Phoenix. We have a bunch of mountains. She wanted to go hike to the top of Camelback Mountain. Mm-hmm. And so we did the same thing. We were up there. It was windy. We watched the sunrise. And right when the sun came up, we did the same thing. We were so happy. We said, hey, will you take our picture? And the cool thing is it's on the iPhone. So when you turn the phone on, it's one of those live pictures. I don't know if you're familiar with that, but it moves. And you can actually see how windy it was. Our shirts are flying.
Your picture moves on your home screen?
Yeah. When you turn the phone on, it's the picture, when someone's taking a picture and their phone's kind of unsteady, or that's that live photo with an iPhone.
Yeah.
And so you can actually see our clothes are, waving in the wind. It was so windy up there. So it's pretty cool to see that. But
that is awesome. I'm like, man, I want my pictures to move on my home screen.
Yeah, it was pretty cool. It looks like a little 3-second video.
Yeah, cool.
So Jason, where can we find out everything about you? We're gonna have links to everything we talked about in the show notes, but somebody listening right now, where can they go learn everything?
Yeah, first and foremost, lenda.com, lenda.com. That's our main website, and all of the information about the company is there. You can see my picture and all of our team and everyone that's behind building this thing in the About Us section. For anyone that's interested in what we're building from a career perspective, there's a careers page that you can go and visit and take a look at all of the open job recs that we have. And you can start there. And then from a LinkedIn perspective, for me personally, feel free to look me up, Jason Vandenbrand. I'm always happy to connect with people that are passionate as I am about finance, personal finance, and specifically mortgage, financial literacy projects, things like that, things that all of us together working hard so that in the year 2025, financial future and security that we're all looking for in the country, with our collective power together, we're all working towards that. And so happy to connect with anyone out there that's working towards this.
Cool. We'll put links to the LinkedIn page also in the show notes as well. Hey, Jason, thanks so much for coming on the show, talking about the mortgages, and just kind of opening up an opportunity for people out there who are, like me, just sick and tired of the same old, this is the way it's always going to be. Get overcharged $8,000 for your mortgage because that's the way it has to be. Something new, something fresh, something different. I'm excited to hear the stories of, your future users, because I think this is going to definitely change the way people are getting loans online. It's inevitable. It has to change. The rest of it's garbage. We've seen that.
Totally. Well, look, my honor, like I said, happy to connect with you and happy to be invited onto your show. And we'll talk soon. Thanks, Chris.
And just like that, we wrap up another amazing episode of the Money Peach podcast. All the show notes, the links, anything Jason and I talked about can be found over at moneypeach.com/session64. That's moneypeach.com/session64. Special thanks goes out to my producers, Steve Stewart, and my assistant, Kayla Sloan. Without them, this show would not be possible. We'll see you guys next week for episode 65, where I bring on my friend Whitney Hansen. We're going to talk about money. We're going to talk about paying off debt. We're going to talk about how to do things that are cool with money versus being broke and living paycheck to paycheck. See you guys same time, same place with another amazing episode of the Money Peach podcast. Take care. Boom,